Alright guys, let me walk you down through how I got this trade. This is a weekly candle on AUDCAD. That's Australian dollar versus Canadian dollar. This is a weekly chart, so I'll be walking you down on how I got this trade. Alright, as you all see, it is obviously bullish because this range has not yet been closed. So if you look, you find out that the market swept this low and has broken structure, retraced here with just this week, and then it's pushing up. So let's go to daily time frame and see how the thing got interesting. So as we all know that this was where the market sweep its liquidity just by this week and then create a structural shift here, retrace into this place and then push up. So what we'll be expecting high actually is, you see, last week we closed the market at this point, so actually I was actually looking for a bullish market. Okay, so I was looking for a bullish market because of this markup here. Because of this retracement, the market retraced into here and then push up. So some of you might just think of, okay, this place, you see, this place has, the market has not closed below this place. So actually it's not even about closing below this place. We just need to understand that the market moves in an impulsive way. There is an impulsive trend and there is corrective, right? So that's as the case may be. So when the market is retracing back, you see, that's the importance of this of these weeks here. So when you go down to lower time frames, you find out that the market has retraced into some other places before pushing up. So this is what this candle was. I think, yeah, this candle was where the market closed last week. So this is a daily candle, and we all know that today is Monday. So what we'll be looking for is, we'll be looking for how we'll be going above this place. So this is our target area, which is the high of the market. So as I've already seen that, so actually it's actually not a big deal to me to only look for buyers. So as we just woke up today in the morning, I checked the chart and you see, obviously this is the same, almost the same thing it did in the daily time frame, that it took away this high. Immediately we just woke up, I found out that it took away this high. So what I was actually looking for basically was to take this low out. So when the candle produced itself and took this low out, so what I was actually looking for, the direction was bullish direction. So what I was looking for is for the market to sweep below any low of the 4 candles and then 4 hour candles, and then I'll be looking for longs. Alright, so as I woke up, this one came, it didn't take away any of these candles, so I was actually patiently waiting. So as it closed, this one produced itself, and you see, I dropped down to 15 minutes. That does it. I don't rush, I don't just follow the time frames like that, because I already know my bias. So actually I was looking for the market to sweep below this low. So, and you see, below this low there is a fair value gap here when you go to lower time frames, right? When you go down, so you see that is an inducement here, which is basically when you see that we have a structural shift here. So this is an inducement liquidity. Then the market came and took away these lows and then took away this low also, and reference to an institutional reference point. So we bought from here. So that is it. If we go lower to, let's just say, all right, I think I've dropped to, yeah, this is actually okay, but I think I use the, yeah, I use the 5 minute. So this was how is it? You see, this was where the market came to, and you see even the candle of the other block was overlapping with it. So this was actually the place I I bought from. All right, this was actually the place I bought from, and this is I think I targeted here. Yep, I targeted here, and I allow it to go above that. Yeah, this was my target. So this is basically how it is. It's very simple if you could understand how this thing works. Yep, so that's how it is. The main thing is patience. Once you have patience in this market, I believe you will see a lot of progress. It's not that you're not going to pick some losses, but once you have a strategy, and then patience should be next, you wait for the market to tap into your point of interest. Your point of interest is defined by your strategy. Once you have your point of interest, you wait for the market to tap into it. Sometimes when it comes down, it's about to go up, you thought, oh my god, maybe there's reference this point and go. Understand that the market breaks away, that's shift a structure, and then leave a place where buyers or sellers will be tricked in the market. The market is about manipulation. So when you are in the right side of the probability, you're good to go. If you're wrong in the wrong side of the probability, then that's still okay. If you have good risk management, you still be okay. All right. So this is just basically what happened, what I got in AUD CAD. I was actually waiting for GPUSD and Euro USD to play out, but they didn't. This was actually the place I wanted. I was expecting the market to come and tap into, but it didn't tap into it actually. So it was below this low. So I waited, it didn't come. So also on Euro USD, you see the same place. I was waiting for the market to come into it. It didn't come. So that is basically what happened, right? So it's not that I'm always perfect, but at least there is a level of mastery, and there is, with consistency. Consistency gives birth to plenty of things. In consistency lies the power of everything. All right, so that is just it for now, and thank you. Like, subscribe, share, and follow for more. All right.